stock market's rigged.
By whom?
By a combination of the stock exchanges, the big Wall Street banks, and high-frequency traders.
Who are the victims?
Everybody who has an investment in the stock market.
GameStop. It's been a wild week over at the New York Stock Exchanges. GameStop once again exposes what was just said, the hidden scam. Wall Street is rigged against, well, you. After a 3-year silence, Roaring Kitty, the leader of the GameStop short squeeze from 2021, reappears with just one meme post to his X account, followed by like hundreds of memes. But anyway, we'll go back to that in a second. That was all it took for GameStop and AMC stocks to begin ripping hard. But New York Stock Exchange officials, they were not in the mood for this kind of bullshit. To help out the retail crowd, they halted trading on GME and AMC stocks more than 50 times this week. So what exactly is going on? Why has this character, Roaring Kitty, returned? And are we on the verge of another epic meme stock rally similar to 21, which of course could be very good indication for how the crypto markets could go? Moreover, does this week's trading halt confirm that the New York Stock Exchange and other U.S. regulated markets are nothing more than vehicles for transferring money from your pockets to those of the fat cats up on Wall Street? Well, in today's video, we are going to break that down for you. So let's go. Let's get it, guys. We're going to start by revisiting the great meme stock rally of 2021. Those were the times, weren't they? Everyone was in lockdown mode, spending most of their hours sitting around at home watching YouTube videos on cryptocurrencies and stocks with a bit more cash than usual thanks to a little bit of that government ka-ching sloshing around. Well, in 2020, conversation on the Wall Street Bets subreddit started to develop, floating the idea that GameStop was undervalued and that due to the crazy number of short positions out against the stock from some of New York's largest hedge funds, that there just might be a chance for retail traders to push up the price of GME much higher and to trigger a major short squeeze. And we just take a note to say, gross, these hedge funds always just shorting everything. Nuts. Anyway, central to this conversation was a Reddit member by the name of Deep Effing Value, otherwise known as Roaring Kitty on YouTube and Twitter. Now, Roaring Kitty had purchased $50,000 of call options on GameStop back in 2019. He telegraphed his position out to the community and then helped to spearhead the GameStop movement. So Wall Street Bets members, they got behind the trade. They pushed GameStop's price higher in January of 2021. This in turn then encouraged a larger retail crowd to follow suit because prices going up brings people in. It all started going viral. Everybody was talking about it. And then the short squeeze happened. Hedge funds were forced to buy back the shares that they had borrowed in order to stop the bleeding. This in turn drove the price even higher, giving more momentum to the entire trade, and thus triggered even more short squeezes, screwing over more hedge funds. Once the dust settled, GME had pumped 2,900% from $4 to $120 before crashing back down to earth. And a similar pattern played out with other meme stocks like AMC, BlackBerry, and Bed Bath & Beyond. And the damage done to the New York hedge funds was extensive, and they were pissed. They were pissed, man. Melvin Capital Management lost 50% of their assets over the ordeal. Shorters, man. They deserve it. They required $2.7 billion cash infusion from their friends over at Citadel and .72 Management Asset Management. Citron Research, Maple Lane Capital, D1 Capital Partners also took on huge losses. All in all, the hedge funds lost about $5 billion in total. Suits lost money, regular people made money. Now, after a series of investigations, congressional hearings, and lawsuits, yeah, that's what happened, right? The entire saga faded into the background. That is until early Monday morning, which brings us up to date on our story when this character, Roaring Kitty, who had been dark for the past 3 years, posted the gamer leaning forward meme to his X account, aka it's time to focus, guys. And of course, the Wall Street Bets community, which, by the way, now has 6 million members, they immediately picked up on the post and lost their minds. Then Monday's New York Stock Exchange market bell opened a few hours later, and booyah, shaka-laka, binga-bada-boom. GME surged big time, rising at one point to a 58% gain within the day, and then another 85% on Tuesday. And of course, AMC, BlackBerry, and several other meme cryptos, actually, like GME, meme crypto, an altcoin on the Solana network, I believe, pumped like crazy as well. Now, at the time of this recording, prices have cooled off a little bit, but not without the hedge funds starting to take a hit and to take notice, and people getting pissed again in the big money suit world. Estimates are about 1.2 billion in shorts were wiped out from this week's price action. Now, before we continue, I want to take just a quick moment here to let you know what the best damn newsletter in the cryptocurrency business happens to be my newsletter. It's called Wealth Mastery. It's absolutely awesome. Our readers love it, and I'm sure you will too, because every week we're going to bring you the latest and the best happening in the market, the top insights on airdrops, altcoin news, meme coins, deep dives, NFTs, charts, technical analysis, and much, much more. You can join our 125,000 plus weekly readers and sign up for free using the link down below in the description on YouTube or the pinned comment on X. Now back to the regular scheduled programming. Now, I don't know about you, but I've got some questions about this whole thing here. First, why has this character Roaring Kitty returned? All I can do is offer my theory, because the only thing that we have seen from him since returning is just a continuous stream of memes and GIF shit posts on his X account. It's actually getting kind of ridiculous, just nonstop, every like 15, 30 minutes, like a new whatever coming out on his account. So there's been no real explainer, no statement, nothing. What's the agenda? What's going on? Just, hey, I've started posting stuff and I'm back, and look, the stock's going crazy. So can only look at the details in front of us as we have them. And that would be that GameStop's short interest float, or the percentage of total GME shares that have been loaned out to shorters. You see, GME's float has been slowly creeping back up since, of course, the hedge funds got wiped out so dramatically back in 2021. They're back for more pain. According to research released from this week, S3 Partners, there has been a steady increase in short positions on GME since the beginning of this year. And just before that character Roaring Kitty made his return, GME's float hit 24%. Now, to be clear, this is nowhere close to GME's float before the 2021 pump, which was more than 100% at the time, which is wild. Bonkers. How's this stuff even happen anyway? Wall Street games, right? However, 24% still pretty gosh darn significant. In fact, the average short float for a U.S. publicly traded company is 4.3%. So GME was 6 times that by Monday's opening bell. So my theory right now is this. Roaring Kitty simply saw an opportunity to give the hedge funds another black eye, and he took it, and it worked. This leads me, of course, to my next question. Are we on the verge of yet another face-ripping meme stock rally similar to 2021? And of course, if that happens, it's definitely going to rip up with meme altcoins. You know I'm here for it, but as of now, let's just cool our jets a little bit. And there's 2 reasons for meme stock skepticism. First, you have to go back to the 24% float now compared to the over 100% float of 2021. The hedge funds simply aren't over-leveraged enough on their short positions in order for retail to really trigger that kind of 2021 style mega crazy short squeeze. That's just the math, guys. It's just the math, okay? Second, the retail crowd today looks a lot more normalish as compared to 2021 when everybody was, again, locked in their homes. Everyone's pretending to be day traders, all that kind of stuff. People are back to jobs. Life's continuing. We're not in those same kind of conditions. Things have kind of gone back to quote unquote normal. Having said that, Wall Street Bets, 16 million people, right? They love GME, super stonk subreddits, all this kind of stuff. They're really, really big, and they represent some of the largest communities on Reddit. So again, there might be some more energy left in these meme stock moves. Can't bet against that. Now, we will have to see what happens, of course. And the last question for today, obviously, is all a very interesting story, but do this week's events show us that the U.S. stock market is so purposely rigged against retail? Well, as mentioned earlier, New York Stock Exchange officials halted trading on GME and AMC more than 50 different times this week. And it's not the first time they've done this. They've done this many times to many different stocks. Excess volatility. It's too much volatility, guys. Stop trading. Now, if we just look at this objectively, the picture isn't pretty. Here you've got a number of Wall Street hedge funds that have accumulated billions in short positions on these stocks. And remember, these guys are all just, they have lunch together. They're hanging out. New York Stock Exchange official, these guys are all going to drinks together. They all know each other, right? They're all in a little club, and you ain't in it. Oh, you're definitely not in that club, but they are. And just when retail decides to push prices in the opposite direction, just push the stop button, which of course helps the hedge funds, not you, but the hedge funds. At minimum, what absolutely can be said is that this is not a free market, because a free market would let the participants place their bets and things fall as they may. Let the chips fall. See what happens. What all this looks like to me, of course, is that the institutions, they get the inside baseball. They get to gutter the bumpers with their bowling. Well, retail, you get the gutters. It's not very fair, is it? But that's Wall Street. Wall Street's never been fair. Wall Street's always been a us versus them kind of institution. Wall Street has always been in it for themselves, not for you. And Wall Street's never been able to be trusted. So why we start trusting them now? Of course, they rig the game in their favor in every way possible, every single day possible. And that's the game. And those are the odds that you play against. It's a great game to play, but you have to understand the rules of the game. And that, yeah, it is a rigged game. Doesn't mean you can't make money in that rigged game, but you have to understand that this is what's going on. Thanks for watching.